Hey guys, really delighted to welcome our next guest, Tom Luongo of Gold, Goats and Guns. I love the three Gs. It reminds me of the Bee Gees, which were a classic era. I think you're a greybeard enough to remember them as well, Tom.
Oh yeah,
But welcome to the show. And before you respond to that, also please give us the whole backstory, how you got to the three Gs, and a little bit of a profile of what it is you're all about.
sure. It's funny. I was when I first went to work for Newsmax. I wrote a financial newsletter for them, like starting about 2013. We did a retreat, and one of the assistant editors, after we did a whole retreat together, and just talked about the stuff, he said, "I really want to do a promotion around Tom with Gold Coats and Guns," and I'm like, "That's a great name." And when I wound up having to go independent after that gig ended the first time, and I'm back with Newsmax again, writing Ultimate Wealth Report for them, but I went, what am I going to name this thing? I'm like, Gold, Ghosts, and Guns sounds reasonable because that's literally my life, right? I own gold, I own goats, and I like guns. And I'm a libertarian and an Austrian economist by trade. I live out 14 acres in North Florida. My goats one of my girls just had surprise babies. Yes, 2 days ago, actually, a couple of boys,
Nice.
unfortunately not girls, but I'll they'll get eaten. It is what it is, and that's that. And the more I thought about the whole idea of Gold, Ghosts, and Guns, right, is that it really is kind of a way of looking at being your own central bank and then building how you build your personal economy, right? You first you save, and gold is kind of savings, it's cash,
Yeah.
and then you have industry, which you to deploy your savings to do something with it. In this case, be a goat farmer. I can be a thing. I can do a thing. And then after that, once you have savings and you have industry, then you need protection, and guns are your metaphor for protection. So and the portfolio strategy for the newsletter that we publish is really built around that basic idea of, a certain amount of money goes into savings, high yield, monthly paying types of cash generating investments. And then you have your going concerns, your big companies that are you deploy off of, and then you have your protection, you have your hedges against your fundamental thesis, and you lay it out that way. And then, some spec bets and what I call found money, gold miners, weird cryptos, yada, yada, yada. So,
Very good. No, I like that. And there's some parallels with us as well. We're sort of the
mhm,
three circles. We're the crypto sniper that's obviously very specific to one particular industry, but it has a bridging role from the old world, I suspect, into very much a new world planned for us all.
mhm,
We have the market sniper, which is the base traditional markets, which was your traditional equity and FX trading, which I've done a lot of. And we
mhm,
have a real method of how you should build and wealth through long-term position trading in that space in terms of riding the big trends. And then we
mhm,
have the reset sniper, which is the fact that in essence, there's a reason why a lot of these things that are non-random and have pattern behavior around the globe that seem to be going on, and there's so little arbitrage or variance, whether it doesn't matter which geography you're in,
mhm,
and that is the great reset. And our big goal is how do you prep for that, build wealth, protect wealth, which is very
mhm.
much in your guns portfolio. So yes,
Yep.
a lot of interesting parallels. That's awesome. What and tell us your skills, the backstory. I mean, you left school, you did.
I have a degree in chemistry. I did 25 years as a bench and research chemist. I got interested in all of the stuff, the economic. I was always a political, like, I just checked out as a young man. I just checked out on politics because I knew it was just a waste of time. I just knew
Yeah,
they were all lying to me. And then
yes,
I woke up one day and I took the world's smallest political quiz. I'm like, oh, I know what the problem is. I'm a libertarian. I'm not a
yeah,
Republican. I'm not a Democrat. I'm not a commie. I'm not a fascist. I'm a libertarian. And that's why I'm so out of phase with the world and why I'm so angry at it. And then
yes,
eventually that just kind of led you down the path of reading The Road to Serfdom, reading Mises, going over to Lou Rockwell in the early days, yada, yada, yada. And then, that became, all this, that became the thing that I did with all of my free time. And I was never, passionate about being a chemist. I'm good at it, but I was never passionate about it. It was just a thing to do while I was at work to make the money to then live the life that I wanted to live in the other 7 hours of the day that I had available to me, right?
yeah,
So be it playing games or, which taught me a lot, or playing music or whatever it was that I wanted to do, learn to be a writer. But at a certain point, somewhere around 2005, it became really obvious that this stuff, the 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 market stuff, and the implications for what's wrong with the monetary system, and then therefore what's wrong with society,
Yeah,
because money is one half of every transaction, right? So a corrupt money begets a corrupt society. Like,
correct.
once you get into that headspace, and you have all these other, and you realize that you have all these other skills. And then I woke up in my early 40s, and the last job as a research chemist ended, and I couldn't found myself almost unemployable. Early 40s was just a BS, um, no MBA, no
Mm.
master's or PhD, formal training. I'm not going to find, I'm either overqualified with 25 years for a basic job, or I'm underqualified to run a laboratory, even
Yeah,
though I have been. So it's like I just couldn't get work,
yeah.
and I had to change. And so I finally resurrected the idea of becoming a writer off of my teenage years shelves, and said, okay, we're going to do this, and we're going to try it. And we wound up where we are today.
I find that moment where you get shaken out of corporate world actually the best gift that ever happens to you. But
Mm-hmm.
it's also one of the hardest things to go through. It's a bit of a birthing. I refer to often, I'm known for referring to the Shawshank Redemption, crawling the shit pipe
Mm-hmm.
into the river that is freedom, and then getting to your Caribbean boat.
Right.
I had a baptism of fire and going through that again, and I just said I'd never work for any corporate entity apart from myself, and I have to find a way to be useful to other people and to be able to monetize that. And once you make that decision and you burn a few bridges for turning back, there's only way is forward. You tend to have to come out and you find a way. Yeah, so it's a great cycle. So let's cut to the craziness that is at the forefront of both our minds, that we'd both been tracking even when we were forced to do other things. Um, and I'm interested in your take. Recently, it turned out we were all mistaken. Many decades of economic theory that's had two negative quarters back to back used to
Right.
be unequivocally a fairly tight definition of a recession. Now,
Yes.
all of a sudden, there's a whole bunch of weaseling and weaseling room for weasels to weasel in. And as a man who looks after goats, not weasels, I'm just curious as to what you make of the motives behind this. And what does it mean that they're electing to ignore that? Because I have my own theory and I'm very interested in other people's.
To me, it's very political, right? At the end, this is about trying to save the Democrats from the ignominy of having driven an economy that has been given trillions of dollars in stimulus, to the brink of disaster in a year and a half. And
Yeah.
they're dead in the water. They know they're dead in the water, and they're honestly, they're just trying at all times, like, what do we do? What can we manufacture for something to rally around? Was it Roe v. Wade? Well, they're trying. I mean, they're bringing Robert Reich out to, like, argue about Roe v. Wade. That's a great that the great revolution against the GOP is coming. Yeah, okay, fine. Just
Mm.
put your mark. Just go back to reading Marx and shut up, please.
Yeah.
Then what's next? They don't
But
have any.
officially, don't
Russia's
forget, the
failed.
Fed,
What's that?
sorry to interrupt you, but
Sure.
officially the Fed is not politicized. And
Right.
whilst I'm aware it was the White House that released that statement, you've recently had, I think it was yesterday, Bullard come out and say, no, it's not a real recession. So now he's an employee of the Fed. Now he's
Yeah.
not supposed to be Democrat or Republican. So um, what do you
Yeah,
make of
and
that?
Bullard's interesting, right? Because Bullard's usually a hawk on things like this. Bullard's usually the first guy to go, yeah, we need to raise interest rates, right?
Mm,
So, um, I mean, at this moment in time, the Fed is a very interesting problem, or very interesting phase in its evolution, because it's not supposed to be political, but it's been intensely political for the last year and a half, or at least since the middle of June last year, when Powell raised the reverse repo payout and started draining the world of overseas dollars, right? So the world's just got drained of what, $1.7 trillion of liquidity, of real important liquidity, bank liquidity, and and has been under fire ever since, um, and under the kind of political pressure that it's never been under before.
yeah.
So, I mean, I think everybody is trying to, play, present a happy face up front, but there's serious, serious divisions happening up on Capitol Hill. I firmly believe that the Marin-Nichols building and the Treasury Department are not on speaking terms. Like, I don't believe that Janet Yellen and Jerome Powell have each other on speed dial anymore at all. I think he's removed her from his phone because this one went out with all of the fire and brimstone to put all of these sanctions on, and he threw her under the bus at a Humphrey Hawkins testimony saying, no one ever contacted me about the effect on these sanctions.
Yeah. Yeah.
And then so I think there's a lot going on here, and I think Bullard saying that is just, he's just kind of going along with it because the Fed
When
right
you
now I
spoke
think
to
wants to create a little bit of a rally, right?
yeah,
Take a little bit of the pressure off right now, so
when we
that they can.
spoke to Danielle DiMartino Booth, she actually
Okay,
said Powell was a natural Republican.
yeah,
And of course, you may well. I'm just backing your possible
sure.
narrative of conflict there because Yellen, of course, is now serving in the Democrat Treasury Department, having been a Fed official herself. So
And
yeah,
she's
there may
always
be
been
that.
she's always been DNC connected. So was Lael Brainerd.
Yeah,
And it's interesting that you bring up Danielle, who I'd love to sit and chat with because I've used some of the things that she said to in my which she's not allowed to say certain things being a former Fed former Fed employee, and I know, but you read between the lines of things that she said, and I talked to people who know Danielle, and so I haven't been able to speak to her directly, but to validate my argument that the Fed is actively trying to undermine the Biden administration because the Fed and I think the commercial banks are terrified of what the World Economic Forum, Klaus Schwab, Europe, I think it's all Europe. Now, the Chinese to a lesser extent, but mostly Europe, want an end to commercial banking. They want it all rolled up to the central banks, central bank digital currencies, and all that. And Powell has no interest in this. I don't see him having, other than like giving lip service to it, the same way Bullard's giving lip service to things, it not really being a recession yet. Like I think the Fed goes like full hawk at the September 20th meeting and raises another 75 basis points just to put the hammer down that we need to get rid of these people who were vandals and trying to destroy the United States. That's what I think. And Powell's effectively said in early June last year, about 2 weeks before he raised the RRP rate, um, he was at a meeting with a central banker convocation over in Europe, and he was with Lagarde. And Lagarde came out to announce to the world that we were going to coordinate central bank policy to combat climate change. And Powell stood up and went, "I'm not. I have a dual mandate from the people for stable prices and full employment. I don't. I no. And she was livid because she did not expect that to happen. And then 2 weeks later, he started stealth tightening,
yeah,
which was the only politically uh, with him not being reconfirmed, right? And they used this confirmation hearing, and that's
yeah,
where Danielle Booth is so inspiring because she laid it out to us like in November and December. She was giving interview after interview saying that the Fed is under unbelievable pressure, political
yeah.
pressure, and that they're playing games with his confirmation, which they should have already done in October. So it to me that whole story starts there and then moves forward. And actually, we can even go back further than that. The more I've delved into this argument, but starting there for me, that was the moment where I woke up. Normally, a Fed critic going, could the Fed actually be the savior of Western civilization from these Euro trash commies? Is
No,
this? Well, I don't know. Maybe it's are they at least going to try? We'll see. So
I get
that's
personally the
where
feeling.
I've landed at this point. So
I get personally the feeling Powell's been created as a semi-hero, but in a controlled opposition kind of way. That
mm,
was a good thing to have said at that moment. We're not playing along, and I agree with your point on that. But I do think, and you've mentioned this, when you referred to the next rate hike, I do think what's actually happening on the US is a more aggressive stance and hawkish stance. In other words, people are taking Bullard not so seriously. Essentially, you've got the Fed here and Wall Street here.
mm-hmm,
Wall Street's already behaving like QE's been announced. You're getting
mm-hmm,
rallies on the stock markets. You've even had a small bump in Bitcoin. Risk on is getting a little bit of
sure,
a run, and the Treasury rates yields that were hitting 3.5% have come back now well
sure.
sub well sub 3. Sorry, around 2.7s odd. So it's kind of that summer doldrums we needed, which is counter trend. I think of this
Mhm.
technically as well. So it
Sure.
seems like it's all just easing a little bit back. And I was just leaving a note for my premium community that this is typical doldrums markets, but that you tend to get direction at the back end of August into the beginning of September on a lot of things, and then
Mhm.
they get driven again. Sort of knees come back under tables. in the investment banking area. There's a bit of a summer season still maybe out. So I have a feeling we're going to chop around a little bit more this month, but that's we do have non-farm payrolls tomorrow, incidentally, which could maybe, if it could be a nondescript number. It's kind of what I'm feeling. But if we were to get a strong number, this kind of puts it back up on Bullard's case. Maybe we get a bit of dollar strength coming in again, and maybe that ends things. I'm not too sure. But I'm fascinated. But the point I'm going to make is that I think there's a divergence between the States and the rest of the world, and they're going to drive dollar strength. In the name of fighting inflation, they're going to drive dollar strength. What that actually is going to do is it's going to export the inflation, of course, to the countries that are not raising rates as fast or even doing yield curve control, such as Japan. And we've called for an Asian FX crisis. Do you have, what's your thoughts on the likes of, and this pretty big for euro as well? We've called the parity run, and we expect it to go to sub 8.5. What's your take? Let's talk Asia a little bit.
I'm the thing I've been watching is the Hong Kong dollar peg, right? I'm at the point now where I'm looking at, I believe pegs are going to, all pegs are stupid, right? And they're all going to fail. And so the Hong Kong dollar peg it's clear that the Fed is supporting kind of the Biden foreign policy about going after China, trying to put pressure on Chinese markets, and trying to hit the Hong Kong dollar peg. I saw something, I think it was yesterday, the Hong Kong Monetary Authority said that, oh yeah, we might have to finally get off of the ZERP and go to a quarter point. Like, I think you're going to have to go to a lot higher than a quarter point, guys, if you want to, if you want to save the peg, which, they have room. They have room to save the peg. It'll take them some time because they're only at a quarter point. They're not at 3% or anything. But that's what I've been watching. And I haven't really thought about Asia much beyond that because I'm not recommending emerging markets to anybody at this point, not with a strong dollar. So I'm more focused on the euro. I'm more focused on the idea that I think that there's a real split amongst the elites as to where we're headed. I just don't believe that the commercial banks in the U.S. are willing to turn over the keys of the candy store to a bunch of German Malthusian eugenicists. I just don't buy it. I don't buy JP Morgan and Goldman and the rest of them are going to do that. I just don't buy it. I believe that like BlackRock, yes. BofA, sure. Bank of New York Mellon, absolutely. But Goldman, Morgan, Wells, Citigroup, absolutely not. Like those guys, the Hamptons still matter. They're going to come back to their desks and they're going to go, yeah. And I think the Fed is literally trying to destroy the European, just finally put to bed that the fact that the European banking system is zombies. They've protected the American banks in terms of reserves. American corporates are now issuing a lot of debt after a correction. We got Apple going to the debt markets. You got a lot of corporate papers going to come out. Whereas in Europe, all that debt is bank debt, and they're done. I'm trying to keep it clean here because I usually just curse like a sailor, but I think Europe is screwed like completely in every way, and not just from the euro perspective. I think the ECB has been exposed as potentially to go bankrupt, and I also believe that the more I think about it, the New York Fed, the New York banks, and the Fed together are actually going after and trying to purge City of London from our financial markets as well. I think there's a split there as well because City of London has obviously backed the European Union. They were remain in Brexit and everything else. And so with the split, the SOFR versus LIBOR thing, this is something I want to talk to you about. To me, LIBOR is done, and therefore City of London, which has always used LIBOR as a means by which to control Fed monetary policy. Well, what if you don't have that link anymore? Right? And SOFR is now fully implemented here in the United States. So
for everyone who's listening, can I just do a quick technical? LIBOR is London Interbank Lending Rate, which is how banks share funding and charge between each other. And LIBOR has been the standard for the States as well until this development, which you're describing. Sorry, not everyone will be as advanced.
And SOFR is the secured overnight funding rate, which is the replacement for U.S. debt for LIBOR, meaning all the debt in the United States is now. All new debt in the United States is going to be indexed to SOFR. There's very little legacy debt left. JP Morgan has been doing their traders have been doing podcast after podcast urging family offices and everybody re-index your debt because there's not going to be any liquidity in LIBOR come this time next year. So everybody
Yeah.
get on the SOFR. It's working. We have liquidity, and it's been very stable. And so I've been tracking like SOFR, the SOFR versus LIBOR, 1 month
Argue.
LIBOR
Yeah.
thing carefully to see how it's projecting where the market thinks the Fed is going to go, right? And then I've
Very
also
interesting.
noted in the last few months how since the Fed has started raising 75 basis points, that right after a rate hike, you're seeing a whole lot of, well, we're going to hold LIBOR back, and there's a whole lot of jawboning out of the ECB to try and make everybody believe the Fed's going to pivot. And I just think that's all. I just think that's all George Soros, Davos, British
Yeah.
British tabloid press trying to influence the headlines to push markets in a particular direction, while the Fed inside the Marinericals building, like Bullard and Powell are like, oh no, we're going 75. We'll tell them 50, but we're going 75. We're going to gut these Euro trash commies. And we just pulled the plug on Mario Draghi's commie government over in Italy, and they're going for elections. And 4 days after the Fed's meeting, the Italian elections are due,
Yeah.
which is the biggest tail risk for all of Europe.
It's interesting that you see it specifically in within the West, because I
Mm-hmm.
actually see it even beyond that. I see it. I agree with a lot of what you've just said there with
Mm-hmm.
regards to Europe, because our big calls are Euro USD shorts from 117, beautiful head and shoulders parity run, and we still got the sub 0.85. We actually got a Euro Swiss franc in that as well,
Mm-hmm.
a big short run, because the
Sure,
franc will be standing outside of that.
sure.
But our most exciting trades are expecting the Korean won and the peg fail. And we were early on the Japanese yen 107. And essentially, you're probably familiar with Brent Johnson on the dollar milkshake theory. We part
Mm-hmm.
with him, but we see an Asian FX crisis as being one part. I don't know if this is just the same way of saying what he said, but he was the first guy I spoke to. It was in the charts. Everything looked like dollar strength, and everyone kept saying dollar down, Peter Schiff's story type narrative.
Yep.
And I said, it's not what I'm seeing. And Brent was the first person who, but we first saw a sell-off. Brent was the first person that I discovered that was actually saying this is a different way in which the current financial system fails. Instead of the pound being slowly whittled away by the stronger force that came out after the war, we see actually the hegemony of the dollar actually destroying everything else around it and almost
Mm-hmm.
needing reconstruction on account of the biggest stick hammered everybody else's heads in. And in essence, he gave us the fundamental narrative to match what we felt would happen. But he was early. He didn't know, he's not a chartist. And so we had the 7 trillion print, and
Sure.
that caught everyone mocking him. And I said, no, don't mock this guy. His story's right. He's just not a market timer. And in essence, the market's come back up, and we've had the break up, and it's gone higher, substantially higher. We have a target of 111. That doesn't mean that's where it stops. It just means where
Yeah,
it logically might have another rest,
sure.
from a geometric.
I'm looking at 125 to 130 on the dollar index.
Yeah.
I think it's
The
going to go
top,
so high that it breaks the U.S. economy circa 2025. Very similar to a Volcker style um, interest rate peak, circa 2025, 2026. And I'm just like, this is just pure instinct here. I'm not doing time period
yeah.
charts or anything along those
No,
lines. I'm just,
100%. I understand
no,
that. A lot of people throw out, I mean, even Brent's gone 150, and I think people are losing their heads here. It's a
yeah,
bit like saying interest rates going to 15%. Well, a lot of things will have broken long before you get there, and you will
right.
have had your reset. Because if the dollar goes that high, every nation state outside of America that has debt is already folding and
Yes,
is in and when you have half the world, you're talking, we're not just talking about Turkey and South Africa, then we'll be
sure.
talking about every emerging markets that will have, even ones that had relatively conservative, by the time the dollar starts hitting mid-teens, it's
Uh,
going to be unsustainable. You will have a queue as long as your arm, all lining up outside the IMF, who will all come to America looking for the funding to bail out. So that's when we'll say, well, hey, before we do this, and that's a reset almost. So I almost feel when guys say 150, it's a bit like Max Kaiser saying 250,000 Bitcoin year end, and every $1 million
yeah,
call is made. Um,
yeah,
it's
yeah. No, I
almost
agree.
too, yeah, I think
Yeah,
the stresses will be so huge. And the difference, and this is my other thing that I find, and maybe you'll comment on this, we get a lot of associative thinking with the 70s. And I say it's
mhm.
not nothing like the 70s. It's a hyper stagflation, and you have much higher PEs on the stock market, and you have
Mhm.
much more debt. It is so finely tuned, and small moves are so hyper magnetized
Mm,
that actually you're cycling on the sharp edge of a razor blade, and you
yeah.
twitch a figment too much left or right, you're going to fall. While at least in the 70s, you were riding a road. You had really low equity prices. It was a major stagflation. What's your take on that
Well, I've used the 70s to try and help people. Remember, I tend to like to
conception?
talk to,
Yeah,
to talk to retail investors, so they give some idea of, so I can give them some context to work with. But I do agree that things are orders of magnitude more dangerous at where we are, because
yeah,
let's what leverage giveth on the way up takes away twice as fast on the way down, right?
yes,
So I've been saying, look, I think there's plenty of room for the Fed to raise to 6%.
yeah,
And I don't know that they go higher than that. I don't think they have to. I think, because, typical Peter Schiff style argument of, hey, once he gets to 1%, he'll have to, run back in his hole like Puxatawny Phil saw a shadow, and we're going to get 6 more weeks of QE. I don't see that happening. Not with a savings rate of 5%. Um, and no way do I see the Fed going to QE until something breaks, or until there's spending that comes out of Congress that forces their hand, a la the CARES Act, which is, I don't think Powell ever wanted to really back off in 2019, even the repo crisis. I think that
yeah,
some of that was just the kind of act one, as the
mm,
American banks started to decouple from Europe. Because remember, Martin Armstrong's made this point, and I'm a big fan of Martin's, even though I don't always agree with him. But I love listening to his art, to the arguments, and then riff off of them, see if I put them through the grinder. And Martin made the point, and to remind everybody, that it was the repo crisis of 2019 came about because the U.S. banks, specifically J.P. Morgan, but others as well, stopped taking Eurozone debt as repo collateral. So they were starved of dollars. So there were no euro dollars.
yeah.
So there
And the
was no
JP
levering
Morgan
up.
is the Fed bank, by the way.
Right. And
It
JP
literally
Morgan
is.
JP Morgan, what did, so I keep looking every time I watch this, I'm like, all I can see is Jamie Dimon kind of patting Powell on the back going, good boy. Well done. Excellent job. Like, keep going. You're doing great. And if you listen to Diamond talk in the last 6 months, he's been very ahead of the curve, saying things are going to get worse than you think they are. Things are, blah, blah, blah. He can't say a lot, but he can. But if you know Jamie Dimon, and
He can tip
I've
his
been
hat.
watching him very carefully, because he's the key to me understanding, or me to be right about this. If I'm wrong, I'm wrong. I don't mind being wrong. That's not about my ego. It's about, am I right? Because if
Yeah,
I'm right, then I got good data that I can give people, and I can give them good information. Like, that's our goal
yeah,
in this job. It's not
yeah.
about being right. It's not about our egos
Not
about
making
being
money.
right. It's about making the right calls. So
Yeah,
when I look at this stuff, I think, okay, um, I think the Fed can go to 6, because the Peter Schiff types are all saying, 1%, forget it. Like, well, we're at 2.25%, and they just raised 75 basis points back to back. Did anybody have that on their bingo card in January? A few people did. I hoped that
and the
they would go
market
that way.
rallied on that, and it was
Yeah.
dovish apparently.
Well, yeah, and it was dovish because the market had prepared itself for 100.
Correct.
Because the ECB the day
Expectations.
before went 50, and no one was expecting the ECB to go 50, but the ECB had to go 50 after the Italian government fell.
Yeah. But
So,
on your point around the ECB, not only did they go 50, but as I say, I predicted this about 5 to 7, around about the Greek crisis.
sure.
They secured the license to buy Italian debt and do further QE. So it's the
Right.
it's the classic case of pouring petrol on one side of the fire and water on the other. They're
Exactly. No,
they go,
yeah. Now
okay,
that
if
you bring that up,
America's
I
going to
remember
do
that. That's
raising
right.
rates, yeah, we can show we're going to do it too. But we won't do it by as much, and we're going to have to hold this shit up and that shit up, and we're going to therefore print money to do that.
The BOE just raised rates by 50 basis points this morning, and then and said at the same time that, well, we have to shrink the balance sheet. Like the ECB went ahead of all. Okay, so you have the Fed saying, well, it's just kind of a dovish 75-point basis hike. It's really not as bad as everybody thinks it is. You got the BOE, which was the first one to start raising rates tentatively. Now come out with a 50 basis point hike, and they're actually going to do QT. But in the middle, you have the ECB saying, well, we have to go 50, but we're going to do unlimited QE over here on the side at the same time.
Yeah,
So,
yeah.
like, it's, everybody's looking, anybody with any money on the table has got to be looking at Lagarde going. I mean, I
But
watched
that's
the
why,
presser. Even she didn't believe what she was saying,
yeah.
right?
But that's why I
So,
say it's not just about Europe. Take the
right.
real extreme is Japan on yield curve control.
Oh, yeah. Absolutely.
at
But
point two.
I see Kuroda just doing exactly what the Fed wants him to do.
Yeah,
Like
yeah,
Kuroda over at the Fed just takes his orders from the Fed. You be our wingman. Our job right now, our job is to put as much stress on China as possible and to break the eurozone. And I think actually finally end. I mean, and I think of this in like a big 300-year cycle. Like I go back to the big formation of the Bank of England when I start thinking about these things and just kind of the big macro trends, like big stuff. We got a 310-year cycle of of dominance by the Bank of England.
yeah.
It's over. We have to get rid of them. And we have to get rid of all the attendant banks that go along with them. That would be, the Dutch banks and the old Dutch and Italian banks and all that. They all have to be destroyed because
Yeah.
they've made a power play for trying to get out from underneath their debt so they can continue to colonize the world through
Yeah.
now through bank through central bank digital currencies and I'm just I just think everybody's woken up to this going that we didn't sign up for this.
Mm.
I
Yeah.
really don't believe that a lot of these people signed up for this idea. I mean, they always thought, well, as long we can all be a nice big, friendly cartel when we're all making money and we're all on the same page. But the minute one guy in the cartel says, "Oh, but by the way, in order for us to go forward, you guys all have to die," I just don't see Jamie Dimon saying we're falling on a sword for Klaus Schwab. I just don't see it.
No.
I see Klaus Schwab being put back in the back in the GIMP cellar where he belongs. That's what I see. And the real boys taking care of all this. That's what I see.
The reason why I keep taking you just beyond Euroland, because that was
Mhm.
really interesting what you just said with Japan. So
Mhm.
Japan has actually allowed its currency to go from 107 yen in October to 139 at its peak. And it's
Mhm.
possibly heading back up after we bounce back to 130. So you're talking about 25 to 30% devaluation on a major manufacturer,
Yes.
exporter,
Mhm.
nation state that has
Mhm.
no commodities or energies either, which is a major
Right.
problem for them, but they are exporters. So essentially, your Toyotas are coming in now at Kia prices for the
Mhm.
South Koreans, and Hyundai price, not quite,
And
but you know what I mean, are far
right.
more competitive as probably a more aspirational brand. And that's going to drive the Koreans, which eventually to potentially have a substantial move to the upside in their loss of value, USD Korean won. In other
Agreed.
words, they fail. And then you've got the peg sitting there. And I think this is all going to lead to a bit of a charge on the one. And my assessment of this is because by virtue of seizing the Russian money, which I thought was a bad idea, but
Agreed.
by politicizing that whole game, essentially they've put further acceleration under the BRICS alternative
Agreed.
financial system. But now
Agreed.
they know this thing's, and they've already known it's going to be birthed. So they said, okay, bring it, bring it. Here's a few things that'll force you to do it earlier. And at the same time, drive dollar strength
Mhm.
as this new thing is being born to belittle it. So it's almost like putting the man in a dress as he's born,
Mhm.
in essence. Because I remember when the euro went physical, the dollar it went out at 160. It was euro USD was 160, and literally that they drove a massive amount of dollar strength into the launch of the euro, and the euro ended up down at 80 cents.
Mhm.
Uh, so €1 only bought you 80 American cents from that listing. And it was almost like this, let me just show you who's boss now that you've been
Right.
born. It's like
Right.
the other kid is a couple of years on you and is pushing him around. And in essence, we almost have a new birthing system coming
Mhm.
with this independent notions of American hegemony. And the result is under the guise of fighting inflation, ignoring a recession and driving dollar strength. What do you feel about that notion?
I agree in the short. I agree over the course of the first couple of years here that that's what's going on. But I think and I fully I actually back this move by the Fed. I hate to
Yeah,
say this, but I do. I back this move by the Fed because I see this as a means by which to finally start wringing out some of the unbelievable bad pricing signals within the entire global economy.
yeah,
And that Powell earlier in the year let the cat out of the bag. He said, and I quote, I think there's room in the world for more than one reserve currency
yeah,
at a Senate testimony meeting. Meaning, I think that the Powell and the Fed understand that we can no longer afford dollar hegemony in the same way that we have in the past, And now that Yellen and company have broken the dollar at the behest of Europe, and to try and I really do believe they seize all those Russian assets as a means by which to make the U.S. look bad, right? Because it was the
Mm.
U.S. that got blamed for all this. Remember, we're always the big bad guy while Europe is dragged along as the victim of
Reluctant.
America's
Yeah.
hegemony. I don't believe that for a second. I mean, I just don't believe that for a second anymore. I used to, I do not, and I have very little patience for people in my space geopolitically who cannot see this. So
Mm.
I call out the Caitlin Johnsons and the Pepe Escobars and all the rest of them for their anti-American, the Michael Hudsons, and their anti-American leftism that is just off the charts because it's not what's going on here. The U.S. is actually wanting to, the U.S. financial authorities are actually wanting to pull back from being the world's reserve currency.
Yeah.
They see the writing on the wall because we can't afford to maintain Triffin's paradox anymore. We can't
Yeah.
afford it. So
Yeah.
the BRICS. But at the same time, we have to order of operations. We have to beat down our enemies who are who are putting us in an existential threat and who want to kill our banks, who want to kill
Yeah.
off capitalism globally, like the good parts of capitalism, bank finance and all of that stuff. That's the means by which
There seem
banks are
to be
supposed.
quite a few forces ready to kill capitalism inside America, though, I would
Yes, there
argue.
are, and they all work for Klaus Schwab. Right?
Yeah.
The
Yeah.
Biden
Yeah.
administration to a T, including Janet Yellen, including Biden, Obama, and all they all work for Davos. And then you got the
Yeah.
Fed and the New York banks on the other side going, no. You've got most of the Democrats in the GOP, old guard GOP establishment. They had to push for this now because all the people that they own and operate completely are 80 years old.
Mm.
The Nancy Pelosi's, the Mitch McConnells, the Steny Hoyers, all the rest of it. Like all of their power is really in these geriatrics here in the U.S. And there's a whole bunch of Ron DeSantis's people like me waiting to come in who we've been cock-blocked completely from political power. Note that
Yeah.
it's all baby boomers and silent generation holdovers, and there are no Gen Xers in American government. It's like
I've noticed that. It skipped a generation. I'm a Gen Xer, and I'm assuming you are too.
I am too. High Gen X. I'm 68, dude. I'm like
Same year. Yes.
the
Same
Gen
year.
Xer. I'm 54. So and so it's very clear that there's this they understand this. They want to just skip it and hand the power directly to the millennials, and they're
Yeah.
scared of someone like Ron DeSantis coming out of this, or even worse, some based millennials coming out and going, yeah, we're not doing this. So
Mm.
I really feel that there's that this is a very important angle on how to understand what's happening in the U.S. And a lot of people just don't see it that way. That there are white hats, for lack of a better term, within the U.S. And so if that's the case, and the Fed realizes that, then they're going to allow us they're going to allow the BRICS process to go on, but it's not going to be easy and it's not going to be simple, and they're not going to roll over or nothing. But it's going to be. But the Russians, I think, understand how this game works, and I think the Iranians do as well too. But they're not really as important. But the Russians understand exactly what to do because they've done everything I would have told them to do in face of all those sanctions. I would have made the initial foray towards backing the ruble with gold. I would have said, you're paying in rubles and internationalize the ruble regionally, and they're going to be coming back into the debt market in late September. Yeah, it's not going to be a big bond issuance, but it's going to be successful. And
Mm.
so, when that process begins, the internationalization of the ruble as a regional reserve currency is going to begin.
Yes.
Okay,
I think you stated
that's
quite
my big
smart.
call. That's my big call.
Mm.
Okay, and I've seen this coming for 10 years.
Mm.
I've been saying this since the ruble crisis of 2014 and the way Putin handled it then. I could see this. I could see this happening. And
Yeah.
so, I think we're going to get our quote unquote multipolar world, but it's going to take a long time. And the U.S. is going to retrench. And I think that what Powell and company are trying to do, and I think that the reason why I believe that I'm so strongly in this is that I've seen the Democrats cock blocked on any new spending. They have not been any to get other than like trivial stuff. A couple of $100 million for Ukrainian weapons is not a big deal. I'm talking about $6.5 trillion worth of Build Back Better was destroyed. This was a key because how is the Fed always gets blamed for what Congress does.
Mm.
right? If you really think about it, and we always blame the Fed for more QE when Congress is the one that passes all the bailouts, when Congress is the one that passes the $6.5 trillion worth of stimulus, who gives BlackRock the keys to the candy store to get access to the Fed window.
Yeah.
The Fed didn't ask for any of this. Powell wasn't happy about any of it. They literally forced it on them. I see all these spending bills as blackmail to force the Fed to monetize debt they don't want to monetize,
Yeah.
and then keep the dollar weak. By extension, keep Europe strong, keep capital frozen in Europe, even though all the banks are zombies, all the corporates are zombies. They can't even heat their houses. Blah 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 blah. So I've been looking at this, going, there's the Russians on the one side saying we're going to starve you of energy. And on the other side of it, there's the Americans saying we're going to starve you of euro dollars. Good luck
Mm.
with running the European economy.
Oh God, Western Europe is in such trouble this winter. And it's not just heating, it's the gas has gone up 10x on the forward markets for
I
gas,
know.
and they're all on gas for heating. I mean, I'm chuckling now because we have power outage down here in South Africa, but the entire country is geared towards it. There's
Right.
backup gens, there's backup solar, there's lots of people that are proud of being entirely off grid. They
Right.
even have boreholes and water. And I'm just thinking Europe is so not prepared for this. We had an
Yeah.
incompetent government that was expected, did under invested as expected, and
Right.
everything that you reap from such a multi-decades, 24 years from Mandela,
Right.
essentially you could have, everybody is largely prepared. Europe is going to have it instant. They're going to one world be a first world, and then in a single flick of a switch, they could drop straight to third world for a winter.
Agreed.
And nobody's got the keys. Nobody's prepared. I mean, I want to be a generator salesman, burning greasy, smoky, smoggy diesel engines
Hmm.
when this comes down. Believe me, they'll lose all their green principles, their watermelon communism, double quick time,
Agreed.
when it's 0 degrees C inside their apartment and they're wearing their snow jacket and icicles are dripping off their nose. And so I don't want to say
No.
I'm happy about this.
Right.
I'm not happy about any struggle or disappointment, but the Euro experiment was one of those that was entirely political and non-economic, and I was part of that skeptical British that didn't want to be part of it, that was
Hmm.
always a reluctant partner, and in the end voted Brexit, and basically all we got were the Israelis selling dinghies full of Libyans to cross the channel to us, and a hell of a contribution and very little influence. So
Yep.
it was. I'm delighted Britain voted Brexit, and I wish more other nation states could. And the most unhappy are the Italians, but
Yes.
their problem is they're the most indebted. So they're in a forced marriage that they can't divorce because it's a financial marriage now, and they hate him. It's like a housewife that hates her husband, but he's the millionaire and pays the bill and keeps the heat and the food on her parents' table in the house next door. She can't leave him,
It's
and that's
going to
where the
be
Italian.
interesting. It's I agree with you. The Italians do hate the EU, but I'll tell you that, and I've been talking to some people in Italy about this, and really do believe that if the brothers, if the center right coalition, if the brothers of Italy, led by Giorgia Meloni, win the election, which I expect them to do, and take a supermajority in the both Italian houses, which is I'd say an outside chance that they get a sincere majority, like 60%, is likely. 66% to have a complete supermajority where they can literally rewrite the Italian constitution.
Yeah.
Well, that's an outside chance, and I know that that's what they're going to. The Davos and company are going to work very very hard, and the Roman mafia, political mafia, are going to work very hard against that. But they may not have a choice. If that happens, you're going to see the return of the mini bot idea at a minimum,
Yeah.
and/or you're going to start listening to them say, yeah, that's nice that we owe you all this money. We're leaving anyway,
Yeah.
and we don't
Time for the
care.
lira.
And
Mm,
we don't care. We're leaving the euro, and we're not giving you our gold.
mm,
So, sorry, no, you can't have it. But, well, that's nice. Take us to the European Court of Justice. We don't care. We don't recognize it anymore. And then Hungary leaves the next day. If the Russians take Odessa, all of Eastern Europe will leave. Russia
mm.
taking Odessa is very, very important for access to the Black Sea for the through the Danube River Treaty
Key
system.
ports. I've been
Yeah,
there many times. Key
incredibly
ports,
important.
because at the moment they only really have the Crimea, Sevastopol, and it's on a finger, and it's quite kind of vulnerable and hyper exposed. I think they want most of the south and the east. And
Absolutely, they
to
do.
be fair, people
They
have got
want the
to.
entire they want the entire Black Sea back. Yeah, they want to
Yeah,
leave
the
Rome.
Black Sea. because they don't only want one warm sea naval base.
Well, they
Yeah,
have the
and
one at Tardis as well on the opposite side excuse me, I'm sorry, on the opposite side of the Bosphorus and the Dardanelles in Syria. They have a 100-year lease on the port of Tardis in Syria,
yeah,
and
yeah,
the air base at Latakia. So right, Yemen in Latakia. So
yeah, they'll be happy to have their own land though, and Odessa, if they can get that under the belt, it's going to be a key. It's interesting you mentioned that.
mhm,
Yeah, so and so yeah, so we've got I wouldn't say a hostile Russia, but a Russia that's indignant and continually gets provoked. But
mhm,
it gets provoked via the grapevine through the US on behalf of possibly Europe. The Germans are a bit mixed. They kind of, I get the feeling that they're reluctant. They want to be enemies, but they also realize their dependency. But it seems they're going to be pushed into this. Okay, you asked for this. Go and walk. As I say, go walk the shit pipe. You go have a winter from hell. And see how quickly you put down. And the problem is that that leads to black markets, and that leads to 10x pricing,
mhm.
because what ends up happening is they end up buying Russian oil via a bunch of intermediaries, usually Israelis, that'll be charging a whole bunch more. That'll go via the buyer. It'll be restamped as gas and oil from somewhere else that's not friendly. Because South Africa lived through this in the apartheid era and has a bit of experience with world intermediaries circumventing sanctions and just paying a lot more to get what they could have got cheaper
Right.
on the basis of these official things. I think that could happen, but it'll take a while to come, and they'll first wait for the problem of the lights out and the heating off.
Mhm.
And that's going to be terrible for industry. Imagine, I think they had a producer price in number that came in at 37%. It might
Yes.
have been a month ago now.
Mhm.
That's unbelievably, and that can't get passed on retail, but a lot of it should need to, because businesses won't be able to function. And imagine you have power outages, because we've had the same here. How much do you turn off houses and how much do you turn off of industry?
Yeah, I
Because
know.
that's then an economic number, versus
Yeah.
humanitarian suffering versus economic
Yeah.
suffrage. Who draws that line on whether Mercedes-Benz gets to run its production line on export vehicles versus heating an entire district in Stuttgart or Bavaria or something?
Think of it this way. BASF came out the other day and said we're not going to have enough energy to run our ammonia plants. No
Yeah,
ammonia, no food, no food, no, there's no ammonia, there's no industry. Forget cars, forget anything else.
yeah,
The whole entire, we don't have an oil-based economy. We have an ammonia-based economy. Like
yeah.
without access to cheap amines, we don't have, and cheap fertilizers. We don't have,
That's another thing that's gone up immensely in price in Europe, along with
yep,
natural gas. It's
I know.
insane.
And
So we're short. We both believe in the short euro trade through the
yes,
Swiss franc and the dollar,
yeah.
and we both see a tough call coming on the Asians. What is when you're talking and giving counsel? And
Mhm,
incidentally, we didn't drill down, but you said something in and around the financial wealth management side that you're
mhm.
involved in. How are you, apart from the obvious with the gold, goats, and guns, and we've got to talk about the precious metals? How are you, if you said 5 bullet strategy on the financial side for wealth building in these current reset times, what would be your 5 bullets?
It's going to be tangible assets centered around the U.S. That includes U.S. debt. I don't think U.S. debt is going to rise it's going to rise commensurate with interest rate hikes, but it's everybody else is going to get hit harder. So U.S. assets at a minimum, because I think capital flight out of Europe, out of emerging markets are just going to send. That's what I think is going to send the market high.
So
Certainly
the
the
fact that you're going to be dollar-based assets is going to
Yes,
be
I think
the
dollar-based assets.
dollar-based
I
anything.
still think energy is going to be a good trade.
Yeah.
I think we're done with the correction in industrial metals as well, um, because the cost of
So
production is
copper
still like copper. I think copper at 325 a pound is undervalued at $100 a
and
barrel
palladium.
oil.
What
So
do you
they
feel
either
about
have to.
palladium?
I haven't really looked at the price of
Yeah.
palladium
Okay.
and platinum. To be honest with you, I've been focused on the base metals like copper and lead and
Yeah.
aluminum and
Yeah.
all
Yeah.
and nickel and whatnot. And they all pumped and bumped, and that to me looked like a pure operation. And now we're settling at a new high. We're settling at a new high floor for all of them,
Yes.
right? So it's
Yeah.
no longer 80 cents a pound aluminum. It's now $1.60 a pound aluminum after it went to
Yeah.
three, right?
Yeah.
So we'll be looking at, I think we'll be looking at $3 a pound aluminum again, just on supply chain breakdowns, high input prices, because I think oil is going to stay high. And then obviously the precious metals, because I think they're the obviously undervalued, because while I do believe in dollar strength, I also believe that we're going to get a margin call in the capital markets on everything government related. I think
Yeah.
this is a general government. This is a general government problem. And in this respect, it is very much like the 70s. That
System failure. The
yeah,
insurance against system failure is gold.
it's system failure again. And we had a taste of it in the 1970s. Arthur Burns, everybody forgets that Arthur Burns raised interest rates to 10% before he left office.
Yeah.
It was Volcker who raised them from 10 to 20.
Yeah.
But Burns had already started the process. And Powell came out the other day and said, I don't want to be Arthur Burns. Like, no, you're going to be both, dude, if they allow you to stay in power. You have the opportunity to be both Arthur Burns and Paul Volcker, and you don't have to even go to 20% to get the work done, because you'll have broken the world economy properly. You've got to it's bringing out the credit in the markets is the issue.
So
So
junk debt. Surely you must be a shorter of junk debt then, high yield.
yeah, absolutely, absolutely. I think high quality investment grade commercial paper, without a doubt. Like,
Yeah.
and so
So
I think
Apple.
I just think U.S. big caps are going to do really, really well.
Yeah.
They may be trading at nosebleed valuations by that point, but no one's going to care about that. Like, as long as they're paying 2% yield, they're not going to care.
But if all these things are failing and people are having much higher prices at the pump
Mm-hmm.
for beef, because somebody's buying up a lot of farmland, we all know who. And I mean, I've just looked at something in Ireland where they're paying 5,000 euros per cow for you to slaughter the cow. They're literally engineering fiscally
Yeah,
shortages of red meat, clearly, because they don't approve of
because
us
they want
having
to see
it. Yeah, they want to defertilize our and livestock us. But so there's clearly going to be orchestrated shortages. So that means higher prices across the board. Surely
yeah.
this is also going to be, this is why we've characterized this as a hyper stagflation.
Mm-hmm.
To the man in the street who doesn't run his own business, doesn't have an online with something that has a lot of uptick in this tragedy, it's going to be actually we're going to have the inverse Goldilocks economy that Greenspan bequested us.
Mm-hmm.
With super low rates, with hyper asset inflation,
Mm-hmm.
extensions of multiples. Surely we get the night to that day, because now you're going to
Yeah, exactly.
deglobalize.
Mm-hmm.
Greenspan got that out of globalization. We're going to deglobalize. So you're going to have to source it locally at a much higher cost. Everybody's cost is going to go up. America, in fairness, as a non-American, but as a friend of America, people are hyper leveraged personally. They often don't know the purchase price of their car. They just know their payment price.
I know.
That's not you. I respect you're a very sophisticated American, but there's a lot of people that just,
Oh, yeah.
it's a payment. What's the payment? Can I afford it? And
Right.
they stack lots of payments. If suddenly all these daily expenses goes up, continues to go up stubbornly, in spite of Fed interest
Oh
rate
yeah, no,
hikes.
we have a serious problem here. Don't get me wrong, Constance. I am in no way saying that the United States is going to come out of this clean. We are going to go through an unbelievably bad time. It's going to remind me of the time I grew up in the United States. It's going to be really bad, and I don't know
I
how
say
we.
that mainly, not to knock you or drag you back into the
No, no, no,
mire
no,
with
no, 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 not at all.
Europeans, but mainly because you mentioned the mid caps going strong. I just think with such a reduction and on disposable income
Oh,
and
I
possibly
might have
heightened debt.
misheard you. I'm not sure about mid caps. I might have misheard you earlier. It might have been
Okay,
an accent. I may have missed it in the accent. No, I'm not a big fan. I think
okay,
U.S. big. I'm long the Dow, but I am not long the S&P 500. If you understand what I mean.
okay,
Okay,
okay.
I believe that U.S. equity strength is going to come from capital inflow and capital in flight to the United States. We're going to be the safe haven, the safe
Okay,
harbor,
got you.
and then I believe it's all going to flow right back out once the dollar gets way too strong. And
Yeah.
so what that number is it 110? Is it 120? Is it 125? I just tell people, like, I can see it 100, 120, 125 as the blow off top at a maximum. I don't think it may not even get there. But the big one is going to be in that environment, then you absolutely have to be on gold. And I just think
Mm.
that, and for the people who aren't particularly sophisticated, and I also believe in Bitcoin as well, I just think that those are your safe haven assets. I think silver is
Yeah,
terribly undervalued, and
yeah,
but
me
I
too.
think it's an industrial metal. I don't think of silver as a precious metal anymore at all. So as far as
Okay.
I'm concerned, there's one precious metal and there are three industrial metals.
Yeah.
Platinum, palladium, and silver I see as all industrial metals at this point.
Yeah. Yeah.
So, but I think silver is the leading indicator more than copper is now
Yeah.
for. I mean, and we can argue about that. I don't know if whether I'm right or wrong, but I think thinking of silver as a leading indicator for a rebound in industrial metals prices is not a bad idea because it usually leads them on the way down and then, starts to get off. And silver is just too volatile for
There
its
are
own.
some unique markets drivers specifically because platinum suffered with palladium eating its dinner because of
Sure.
the exhaust use.
Sure.
So palladium's had an unbelievable run, and platinum has been as dead as a door now.
Yeah,
So
I've looked at the platinum supply and demand numbers on and off for years, for 10 years now, and they've just never excited me. I get people ask me kind of on a regular basis, what do you think of platinum? And I'm like, I think the same with platinum as I thought of in 2017 and in 2012. Yeah, it sounds good on paper, but it's a terrible buy.
yeah.
So there's no fundamental argument
I
for
think
platinum.
when we have our big gold run, all of those will
Oh yeah, they'll all
respond.
do well. I think they'll all do well. I agree.
In response. And the one thing about platinum I will say is that it's exceedingly rare. If you need its unique properties, it's exceedingly rare, and it's not the two most stable countries that are the providers, South Africa and Russia as well. But
Mhm.
anyway, yeah. But I think it's a bit like silver. It's just unloved at the moment, even more so. It's an expensive silver that's greatly unloved at the moment.
The one last thing I would say to people, for those who are, and I've been telling some of my patrons this behind, because they ask me questions about these things and they're like, I'm not particularly sophisticated, I don't understand markets very well, what can I do? I'm like, you can look at what your local community is underinvested in and needs badly, and you can
Yeah,
go and try and invest in a local business there, or find an entrepreneur, or work with the local, you know, and your investment capital should stay local at this point. You should really be looking at, do we need
yeah,
more car washes? Do we need this? What do we need? Do we need bricklayers? Do
yeah,
we need somebody do we need a machine shop in
yeah.
town? Like, we don't have any, so maybe we should get one. Like,
Mm.
that's the kind of thing where you can pull a really nice
I like
return
that.
off of your money that way, and also helps strengthen the local economy. So, and keeps that around. I tell people all the time, I'm like, get to know your local feed store operator, because he's going to put you in touch with your local beef, your local cattle grower, and I would buy a chest freezer. You want to hedge against the
Yeah.
future? Buy a chest freezer and buy your cows
Three.
directly. And buy your cows directly. During COVID, I bought a second chest freezer. It's right outside. It's right outside my office, at the top of my stairs, and it got filled with my friend Brad's cow that I got at a good price. And and Brad hunts my property and shoots deer off of it, like, during hunting season. And I get the deer, and he gets to teach his son how to hunt. These are the kinds of things you're going to have to because if you do this stuff, then things are going to break down, and repair is going to be a lot less as an industry. It's going to be a lot less. Things are going to be a lot less disposable in the future. It's not going to be as easy as it's been through the hyper financialization of Keiretsu and Keiretsu production and global supply chains for goods. It's going to be localized production and keeping stuff running. And people who know how to do things are going to have good businesses finally. And I'll be honest with you. I have people in farmland and timberland as well, and I've had them in both of those for a long, long time. I think timberland is it's a counter-cyclical play generally, but it
Yeah,
tends to outperform the S&P 500 over the long run. Hate to
yeah,
hate to hate to hate to tell people, but trees grow 8% a year, and they don't have to be
yeah,
harvested because the
yeah.
carry cost of the land is
And you build in
zero,
wood a lot over there as well.
zero. Right?
Mm,
Your carry costs is your taxes, and
mm,
hiring some guys to come out and collect pine straw, which you use to pay your taxes. I mean, I live next to 50 acres worth of silviculture right next to me, and twice a year they come out and they maintain the land, and they pick up pine straw and they sell it over to Lowe's. Like, it's not a bad business, right? And he's growing pines for paper and pulp production and oriented strand board and the rest of it. We need all that stuff. And so timberland's a great thing. The problem is that there aren't a lot of good plays outside of private equity.
yes.
So that's the problem. You only got a couple of REITs on this, and there's been even consolidation within that industry. Pope got bought by Rayonier, and Rayonier's one of the, I would tell people, like, that's one of my favorite stocks. I've been in it for years, and they're based out of Jacksonville, and they have New Zealand, Pacific Northwest, and America and southeastern U.S. timber land, and they
Yeah.
just rotate it through with a relatively low cost of capital and low gearing because they don't have to worry about it because they're all high growth markets. So
Yeah, I think I like the idea of wood.
mhm,
Highly useful. And as you say, physical things. I like also what you said there, getting local.
mhm,
De-urbanizing is one of my favorite memes.
mhm.
Getting local and rural.
Yes,
Which if you own the acreage you were mentioning and forestry, you automatically are. I'm in the mountains here, and there's so many little home stores that make their own chocolate. There's a microbrewery that makes tasting of beers,
yeah,
and it's all little businesses.
yeah,
I'm
yeah.
so done with the homogeneous Starbucks and Wimpy's and those
Yep.
sort of things. They don't bother to come out here, not dense enough, it doesn't meet it, and it's perfect that way.
Yep.
Everything is home. Look, you have the flaw of the individual not so good entrepreneur finding his way, and you don't have the
Sure.
operations man McDonald's. But I'm as happy as a clam to see that. And then water collected off the mountain, mist and snow, it's your
Yep.
best water. And yeah, that sounds awesome. And gold. So talk to us about gold a little bit. You've got a lot of precious metals fan, and I am in the same space as insurance. What's your take on how it moves? Because obviously, if we're going to have a dollar dominance,
Gold is a confidence trade.
yeah,
I firmly agree with Martin Armstrong about this. Gold is a confidence trade. When confidence in institutions is high, gold gets crushed. When confidence in institutions is low, gold starts to rise. And now the question is the why gold is going to I think gold is going to finally rise is because you can't solve cost push inflation, which is what we have, with raising interest rates. I've been saying
yeah,
this for two
yeah.
years now. Like you don't solve cost push inflation. You solve demand pull inflation with
That's
raising
right. You're
interest
going to
rates.
kill demand so
Right.
much that you will slow the inflation
Right.
tiny bit.
So you're gonna in order to stop the inflation here, you have to literally do the levels of demand destruction that are I mean, so you kill the yacht market and you get the CPI under control, but food prices are still going through the roof. And at
Yeah,
the end of the day, like I don't I look at the CPI and I know it's a fake number. I only care about core CPI. I don't give a damn about oil prices, gas prices, food prices, housing prices. That's all I care about. Health insurance, the stuff that there is an inelastic demand for, because that's your
yeah,
real core, that's your real inflation number. Everything else does not matter. Everything else is just central banks spinning a fairy tale so that everybody up the chain can get their vig and get their skim. The hell with that. I'm not interested in that. So from my perspective, once the Fed has been exposed, just like Volcker exposed Burns in the 70s, in that respect, you know, that raising interest rates doesn't solve cost push inflation, which creates stagflation. Um, then what confidence is the Fed has regained is they're going to lose, and the only way they get it back is to raise interest rates so high, relatively speaking, that they finally can draw some capital in. And it's going to be a matter of being able to draw capital back into the debt markets because
and that is
it's going to
peak
become
pain.
that is a truly four-letter word that I'm trying to actually avoid for the first time, not for the first time in my life, but just in general. I mean, I have a terrible potty mouth. I'm just trying to keep it relatively
No, no, I
clean.
understand. Uh,
So
it's all good. But that is a peak pain point when
yes.
they go so far dealing with using rates as the tool for the
Mm-hmm.
cost push inflation that they in the end have to do demand destruction. And actually, I've highlighted that the Fed has been an introducer of volatility, not stability.
Yes.
And actually, they're going to have to kill demand more than they killed demand in the recent March 2020 events of the pandemic.
Yeah.
And that was essentially shutting down business and locking people in their houses. And
Well,
I find myself saying,
I
it
I
didn't
think
get
that
that bad.
I think it's the ECB that has the bigger problem because they don't have any ability to affect the supply side of things at all. They have to go for demand destruction because they don't actually control the issuance of their own currency,
No,
which is ultimately what they're pushing for, which is to consolidate all the power under the ECB and do away with the national central banks within the EU. I just don't think the EU is going to last that long. I think the euro falls apart before anything like that happens, which is why I'm so focused on the Italian elections because
Yeah.
Italy can literally break the European Union. Okay.
Yeah.
In the US, the Fed has the ability to create
Well, we have
elastic
had the only
money and
reason I'll say that they will try win it around is we underestimate how deeply entrenched this World Economic Forum truly is, because
Mhm.
the Greece were in a similar situation. There was the buyer, the biker in Greek. I think it was. I'm trying to remember his name again. Vasil Vasikas
Varoufakis.
or
Varoufakis.
Varoufakis. Thank you. Help
Tsipras
me
was
out.
the prime minister, and Varoufakis was the finance minister.
And he was the key guy, and he was prepared to do exactly what you were saying about
Hmm.
Italy. And they
Hmm.
just called a meeting and said, listen, we ain't going to let it happen. You've got to drop this guy. He's coming too hardcore. And his mates in the party welched on him, got bought off,
Oh
and
yes,
then just
absolutely,
became lapdogs. And this
absolutely.
is the problem. The politicians get what you can be a radical right winger who sings a great song on the stump, gets yourself elected, and then you turn on your mate who sings the party line of we ain't going to do it, we're keeping our gold, we can go. You take the money, and they just turn the media guns on him, highlight him in the most negative possible way, and you become the new guy because you took the personal check yourself. Basically corruption.
Oh yeah, no,
uh,
Francis, I don't disagree with you at all. I've watched this already happen through the last Italian elections. This last 5 years of Italian politics. Luigi
yeah,
Di Maio, of a five-star, was the new Tsipras of
yeah.
Greece. And then they bound down, and then they got Salvini to knuckle under with the lawsuit and all this other stuff over immigration. But now things are really desperate. That stuff only works when things aren't. This is what's going to happen in Italy. I think is different this time. We're finally uncovered the real populists and the real sovereigntists, and
Mm,
we have this opportunity for them to just stand up because they've already tried everything. They put Mario Draghi in charge of the country, for Christ's sake. Like if they
yeah.
couldn't get, if there wasn't any more screams Davos runs Italy than Mario
Goldman Sachs.
freaking Draghi of the ECB, who said, "Oh yeah, you're allowed to leave." Who told Salvini when he was in power? It's like, if you want to leave the European Union, that's great. Just pay all your debts in gold, and you can leave.
Mm,
Now Draghi just got thrown out on his ass, and
mm.
I think that was American pressure to force him out of office. And someone from Goldman rang him up and said, "Dude, we're taking you out. He still has a couple of friends over at Goldman. We are taking Italy back. You better leave." And so the machinations in the Italian parliament, the fall of the Draghi government, is very, very interesting. And I was chatting with Alexander Mercouris of the Duran about this over last weekend, and he reminded me that, you know, Draghi seemed to have torched his own coalition on purpose. I'm like, oh, Alexander, that makes perfect sense then. Goldman called him up and said, you need to get out of there with your hide intact,
Mm.
because we're coming for Italy and we're taking it back.
Jump while you still can before you
Yes.
get the guy who gets tarred with a reputation of taking
Because
Italy
the
down.
guys
Yeah.
who were because the guys who were the architects of Draghi's downfall in Italy used to be Davos's bagmen.
Mm,
Giuseppe Conti and others were all their bagmen. They were Merkel's bagmen to keep Italy in the EU and to
mm,
undermine the coalition. And then these are the same guys that get rid of Davos's main man. Like that
yeah.
doesn't happen unless something is fundamentally changed. And I think, and who's more powerful than Davos? Very few. But I'm putting my money on, Goldman, Morgan, the Federal Reserve. You know, I'm putting my money on those guys, the guys in the Hamptons. Like, I'm just saying, you know what? No, you guys are sick over in Davos. You don't. We're not. No more adrenochrome. You don't get. No, sorry. It's not. We're done. You guys are sick, and we're winning, and we're taking the world back from you. And you're not gonna get another round of colonization to
Tom, I
ruin
like your
Asia and
optimism.
everything else. What's that?
I like your optimism. A
Yeah,
lot of
I have to
people
have
will.
some. Yeah, otherwise,
I,
I might
I
as well
I
just sit on
am
my porch with a cigar and a drink.
I am a much darker. I think they've won the game. They've got too much power, and they've got everybody, including in the states. But I would love for you to be right,
Me
and
too.
so I'm betting on you against myself on that one,
Fair enough, Francis.
100% all day
Fair enough.
long, and I hope you come romping home. But yeah, that's fascinating. And so going back, if we summarize, because we
Sure.
had a good, interesting chat, but to summarize, the investments, the 5 investment bullet point of Tom Luongo, was get local, deurbanize, invest in physical things. We spoke
Mhm.
about forestry, lumber, useful things. One of your favorites was a REIT. Say the name again, if you would.
It's a REIT called Rayonier, ticker symbol RYN, out of Jacksonville, Florida.
RYN, Jackson, Florida, and they seem to have holdings in not just the States, but New Zealand, I thought I heard
Yes,
you
New
say as
Zealand
well.
Timber as well as the
Yeah,
Pacific
so
Northwest. They just merged with Pope Resources, who's now they've merged into one larger timberland REIT. Very good
yeah,
company.
so hopefully some synergies get unlocked there, and
Yes,
essentially, wood doesn't grow on trees. Oh, hold on, it does.
yeah.
Yes, wood is great, and there's only so much, only so fast you can make it grow, and it's required everywhere. It's a natural substance. Um, I'm different to you on debt. I don't like debt, but I think you
Yep.
said something positive about US debt.
I said something positive that you're going to see U.S. debt outperform better than people expect because it's the U.S. Treasury market is still the deepest and most liquid in the world, and
I
so
think it's going to
for those
outperform
people,
other markets of the
right?
same category. It's like
Yeah,
the European and the Asian, but that still could be an underperformance. Personally, that's where I'm at.
yeah,
But
yeah. Well, that's
maybe
the way
we'll
I
be
look
right.
at it. It's the same thing with the Dow. The Dow could trade sideways while everybody else's stock markets collapse.
Down. That's right.
Okay, you
So
see
the
what I mean?
holding value
Yeah,
is
hold it,
gold.
right. And so there's that, and then transport. I also like transport. We've done such danger of either shipping and logistics,
Yeah,
right?
good idea. Of
Global shipping and logistics, because all of the trade routes are changing because everybody's trying to
course.
move around Russia, or
Deglobalization. Yeah.
right, and deglobalization, or even just internal transport. That would mean midstream energy, midstream, that are people who aren't over levered. So like pipeline MLPs and whatnot that are not over levered. You got to get the right ones, and that's a very tricky space. But there are plenty. But there's some good players in that space, or just in general,
We were
midstream.
slightly bullish Plains All American on the rebound of
Yeah.
energy as one. And I know Buffett got quite a few years ago now, quite heavily long on railroads.
Mm-hmm.
I don't know if you recall that. I think it was
Yeah,
about three
I
or
do.
4 years ago.
I
Quite
do.
physical investment for him. It was a bit of a banner
And
investment.
I
I
did.
can't tell you who it was he bought, but he bought railroads.
And the
Big,
last
big,
thing
big.
I would say is I'm also interested in. There's going to be some emerging markets that do very well.
Mm,
And I think that the ones that align themselves, I think Saudi Arabia or the Arabian Peninsula becomes very interesting if the
mm.
Saudis voluntarily depeg. I keep waiting for
I
them
was
to
about to
do it.
say there's a peg in there to fall,
Yeah,
and I think it's
the peg
very
is the
vulnerable.
issue with the Saudi Arabians. I've been waiting for them. I thought were going to be forced to depeg during the 2015 crisis. I was wrong. They went for market. They went for market share to take from the Russians, and then they had to sue for peace, and now they're the Russians' allies on in oil. So that's the big shift there. And I've been publicly saying for a long time now, the MBS's smartest play would be while oil is strong to depeg the real while
Yeah.
it's strong. Don't wait for it. Don't wait for oil prices for Davos to collapse oil prices. Don't do
And
that.
don't wait till you've
Depeg now.
spent all your foreign reserves
Yes.
protecting it and you're
Do it
skint as
now
a.
and start the process. But that's why I think Biden went to Saudi Arabia last week. That's why there was the announcement this morning of a big arms sale for Patriot and THAAD systems to the Arabian Peninsula. I think it's all just a bribe to keep MBS from depegging the real. So I think MBS is already on board with that. I'll be
I
honest
think
with you.
I like that. I think the peg fail on the Hong Kong. I think if the Chinese are smart, they would let that go early
Yes,
as well, rather than throwing good money under bad.
I
And I
think
think
they,
it
I
could be
think they need to.
different than the Euro Swiss franc fail that's at 1.2. They could just to say no. There's only one way this goes.
Yeah,
Let's preempt. That's fascinating. To add to your emerging markets, I actually like Russia. If you knew the
oh, I
PEs
love
in
Russia.
Russia, beautiful
I
things.
can't be in it anymore. As an
I know.
American, I can't be in it. So I have to look at Russian proxies at this point.
Yeah,
So the big one for me is Turkey.
yeah,
I actually have a spec bet on Turkey from Turkish stocks. The problem is the lira. Obviously, the Americans are attacking the crap out of the lira to try and get Erdogan out of power. I think it's going to be very interesting to watch what happens with Turkish elections over the course of the next year, and whether or not the Turks finally, are able to figure out a way to bring foreign currency in to Turkey that is not and deal with they have a lot of dollar denominated corporate debt that they can't get rid of, and that the
yeah.
last round of QE from the Fed during COVID, they were on their way out, and then because they had started this process in 2018, and then when the Fed went back to the zero bound, the Turkish corporates levered back up again. another 50, the 60 or 50 or 60 billion dollars of Turkish corporate debt that they delevered and redenominated wound right up back on their national balance sheet, and then that's why the lira is at 17 or 18 this morning. And
Yeah.
Erdogan's crazy, but he's not stupid.
Yeah.
And it's a very I don't know how this plays out, but I just know that the standard Keynesian arguments about raising interest rates to stop the currency collapse, when you're at 20%, I'm sorry, going to 30% doesn't change anything. It's a confidence problem.
And
It's
and
not it's not
he's recognized that.
and he said that directly. This is a confidence problem that he's got to get the handle on the confidence. It doesn't matter what the interest rate is at this point. The interest rate
Yeah.
honestly never should have to be above 12%. I mean,
Yeah.
in an extreme case. It is a confidence issue, and that means that there's global forces forcing a lack of confidence onto the Turkish markets. While there's plenty of money that wants to flow into Turkey, but it's going to come from the Russians, the Iranians, the Chinese, people who are, in many ways blocked from being able to do so. So watch Turkey very carefully. If Erdogan's able to figure this out, you know, then that could be a bang up play, because the Turk at the lira where it is now, once the Turks are clear to get the capital inflow into the country, the Turkish stock market is going to go ballistic, because it's
Yeah.
just money's going to fly in there if it ever
But isn't
becomes
this going to
really
be
on.
post melt up and currency
I
failure?
agree.
Full
I
failure.
agree. I agree.
Yeah.
I got to spec
And
that
let
on
that
it now.
happen. It's about
Yeah.
timing now, because such big things could happen.
Yes.
You've got to almost you've almost got to let it all fall. You've got to let all the China smash on the floor. Then you go hunting for picking up pieces to
I
glue
didn't go
back
long.
together.
I didn't go long China until after the market, the large cap markets dropped 40%.
Yeah.
So
Yeah.
to give you an idea. So yeah, I waited until that happened, and yeah, it may not do much for a couple of years. It may just kind of putz around and pay a 3 or 4% yield or whatever, and that's fine. We'll just wait it out. But it's sometimes I may, because I'm in retail newsletter business. My
Yeah.
goal is to tell people stories and give them the mechanisms of a good trade, or the mechanisms of a good fundamental long-term investment, not
Yeah.
necessarily this one's brilliant. Like
Yeah.
you can't make all. It's to teach people how to read a gold company's ledger sheet, balance sheet, how to do this, how to,
Yeah.
and so if you can do that, then you can teach people how to fish, and then they're sending you
Talking on the
trades, and
metals,
they're sending you stock picks, and you're going, oh yeah, that's much better than the one I have in the portfolio. I may have to change that one out, and use
which is your
the,
favorite metal stock? Because the shares have underperformed immensely.
yeah,
Silver or gold? Give me your favorite gold or silver
I
stock.
still think my favorite is still Endeavor Silver, and the reason is because it's a silver producer with zero debt and a management that shuts production down during lean times. Meaning they only open new mines with equity and or savings, so they never are exposed ultimately to the vicissitudes of of the debt markets. And because of that, and I used to like Kirkland Lake Gold, but then they got bought for
Yeah.
same reason. They got bought, and they're part of Agnico Eagle now. Like, okay, so I got to buy Agnico Eagle, which I'm not as crazy about, but it's okay. So just because, for the same reason, it's not a
Tell me, did they
pure
shut
small.
production when the prices were too low? In other words, they just refused to sell at those markets.
Yeah. And
That's great.
Endeavor
I
Silver
like
has
that.
actually been running well enough that you'll notice that that company never reports much of a profit or a loss. That's because
Mm.
they just only sell all the silver they need to run production, and they store the rest of it in a vault. They're sitting on like a couple 100,000. They only produce a couple million a year, so they're sitting on a couple 100,000 ounces in their inventory on their balance sheet, just waiting. And every quarter,
I got a backstory. I rode bikes through Botswana and Zambia with a South African who has a 9% holding in Endeavour Silver.
Mhm.
He's quite huge on it, and
Yeah.
he said, I think he got involved. There was management that was thrown up, and they got new guys in, and they were really serious
Yeah,
about
I like Bradford
bets.
Cook as a CEO. I think he's a smart guy.
That's probably the
So,
guy.
yeah, I think he's very smart. I think the problem is that they bought a couple of properties that were, they bought a couple of, during the last boom, they bought some properties that were, not particularly good. And so they've had to divest that. El
Mm.
Kubo was one of them. And now it's their big project, their next big project that they're going to finance. Terra Nova is that's going to be the big thing for them. If that hits, is as big a deal as they think it is, then they'll have production in the pipeline as a mid-sized pure silver play in Mexico. Good jurisdiction, good cost, right? Like everything's right about the company. Location's right. Management strategy is right. The asset's the issue. And if silver starts to, if I think silver's $50 or $100, and at the upside of this,
Me
and
too.
so
I'm a massive
and
stacker.
yeah.
What do you think of Wheaton and First Majestic as comparing those two?
Oh, I like royalty companies too. I do. I have a startup royalty company in silver that I think is very interesting as well. A lot of old money in that industry have now started a new silver royalty company, um, penny stock. I really like, but I like royalty companies generally. I mean,
Who's your favorite royalty company?
I'd have to say in the long run, I like Franklin Nevada. I'm just a big,
Franklin, Nevada.
I just like Franklin Nevada. I think they're very strong. The management is immense. Pierre Lassonde knows how to run, knows how to price an asset, and knows how to return um, uh, value to shareholders. That's a stock that I always thought was too expensive, and I thought it at $20. I thought at $40. It's $125 or $140 today, and like it's just continues to pay 1.5% while the stock rises 15% a year. It doesn't matter. It's like, and it's half gold and half oil as a
Okay,
royalty
so no
company.
silver in that one. It's gold and oil.
I mean, maybe some silver in there, but it's primarily
Mostly.
half precious metals, half oil. In the same way that the
That gives you
Gamco.
a nice energies and gold exposure in one, doesn't it?
Well, yeah, and GGN, the Gamco Global Gold and Natural Resources Trust pays monthly. It pays what 3 cents monthly on a $3.50 stock, and it's always it's a closed end fund. It's always paying. It's always difficult to get share price appreciation in a gold bear market. So gold and it's about 50% gold and oil. So whenever gold is in a bull market, oil seems to be in a bear market or vice versa. And for the last 8 years, but when we're in the Volcker phase of this next thing,
Both go up.
PGM's going to go to friggin' $12 a share, paying 20 cents a month, like
So
25 cents a
say the
month.
name again. Was it PGM or GGM?
It's the Gamco Gold and Natural Resources Trust. It's ticker symbol GGN. It pays
GGN.
monthly. Yeah, it's a nice
Nice.
stock. I've got a bunch of pays monthly style dividend performers in my
I like that. I like
portfolio.
that. And you can roll that up and just reinvest as well.
Yeah.
If you're a holder, let it grow
Yep.
and let it accumulate. That sounds really cool. Tom, that was phenomenal. We
Thank
finished on some really nice silver and gold and royalty stocks tips there for guys. I will run the charts on all of those actually.
you. Sure.
It's been a while. You didn't give me a comment on First Majestic versus Wheaton. Which do you prefer?
I don't really have a thought. I
Have a
haven't
view.
really thought about either of them, and I haven't gone through the balance sheets or
No,
their
no
products. And
problem. No, that's fine. I
sorry,
prefer that. If you haven't, you haven't. No, that's
I
all
do
good.
not have an opinion. So
Tom, that was an awesome roundup. So great to have you with us. I really enjoyed that. And we should do this again some point. How do people get in touch with you, both US and international, and how do they engage?
sure, Francis. First off, thank you very much for the conversation and the opportunity. I had a blast. I enjoyed this greatly, and I would be happy to do it again. You can follow my work over at my blog at tomluongo.me, also goldgoatsandguns.com. You can follow me on Twitter at TFL1728, and I have a Patreon, of course. That's how I do my business, and you can find the link to that on the blog. But it's Patreon/goldgoatsandguns. And we have the newsletter at $12 a month, or just I do a biweekly market report, basically a 45-minute podcast over a slide deck, um, doing chart analysis and whatnot, along with private blog posts for my patrons as well. So that runs four, and everything that plus the newsletter is 12, and we also have a private discussion forum that I have for patrons behind the scenes where we all hang out and talk amongst ourselves. My patrons are the best crowd-funded research team I could ever ask for. They're phenomenal. I love them, and they really help me to. I don't have to go out and find the world. The world kind of comes to me in my inbox every morning. It's very, very,
It's
it's
great
very
help. I
powerful.
have a similar community.
Mhm.
Just for everybody's understanding, Luongo is Luongo. So that's Tom, Luongo, Luongo. The website where they can find all these things, is there one kickoff point that you keep as
Yeah,
well,
just
Tom?
go to Just go to my blog at tomluongo.me. Just search Gold Goats and Guns or my name, and you'll find it. It's not particularly difficult.
Excellent. Tom, thanks you very much for your time. It's been awesome having a chat. Thanks for those gold tips. And I'm betting on you. Don't let me down now.
Yeah,
Let's hope for
hope
some
I'm
right
right, dude. I really do. I do. Thank you, Francis. You have a great, great day. We'll see you soon.
All the best. Bye for now.